All right, people, let's start this show. If you can hear me, please type yes on the chat. If you can hear me, please type yes on the chat or a Y. Hello, hello. This is your first time here. Well, welcome to the show, guy. Welcome, welcome, welcome. Don't save this, and let's go ahead and if you can hear me, please just type yes on the chat. Awesome, awesome. So let's start. Yesterday we had the Fed rate decision, and the Federal Reserve decided to cut the interest rate by 25 basis point to 2%, and and they lowered their target inflation, their inflation target to 1.75%. Now, let's see. We are going to go here through the news yesterday. Let me see. No, that's not it. That's not it. Well, actually, I have it on my news terminal. Well, we have news right now. U.S. Philadelphia Fed Manufacturing Index, 12%, or 12.0 versus 16.8. Previous and an estimate of 10.5. So that's a worse number than the last month, but it's above estimates. U.S. current account on Q2 for the second quarter is minus 128.2 billion. Versus 130.4 billion, with an estimate of minus 127.4 billion. Now, this is what's interesting about the U.S. news right now. U.S. continuing jobless claims were less than previous and less than expected. That's good for the U.S. dollar. And U.S. initial jobless claims actual was higher than the previous, but lower than estimate. So a little mixed news here from the U.S. We can see the reaction in gold. Well, in the U.S. dollar, let's go to the 1-hour chart, shall we? On the U.S. dollar, we're bottoming near the 98.30 on the USD. That's all. Sellers jumping in gold, which is actually expected. So why don't we start by looking at what happened last or yesterday, shall we? We are going to be looking at the bottom right of my screen, right here, where I'm highlighting. Okay, so the Federal Reserve lowered its key interest rate by 25 basis points to 2%, and lowered its inflation target by also 25 basis points to 1.75%. Now let's go through. I mean, that's yes. Cutting rates, it's bearish for the currency, and the reason that it's bearish for the currency is because what it implies. It implies that the economy needs a push from the central bank and lower its key interest rate to make to make borrowing money less expensive or cheaper for businesses in order to maintain the economic the activity. All right, so that gives us the idea that the central bank sees the economy that needs help, so that's why it's bearish for the currency. It should be bullish for equities, for the S&P 500, for example, because it's going to be cheaper for businesses to borrow money, which implies that it's going to the businesses are going to have more cash, which implies that they are going to be upping their production, um, upping their employment, etc. So this should be bullish for the S&P 500, and we're going to see the actual reaction from both the S&P 500 and the U.S. dollar. Okay, now let's go through what the Chairman Powell said yesterday. And if you can hear me, with a good sound, uh, let me know. And if my voice is it's not at its best, I can use my microphone on my headphones. Okay. Right now I'm using an external microphone, but I think it's fine. So right now we're going to go through what the chairman, Fed's chairman, Jerome Powell said. All right. Let's see. It's interesting because he said that. You know what? I'm going to actually. No, that's fine. Um, all right, here. Fed Powell says Fed has taken into account anything that will have material impact on the economy, including trade tensions. All right. So, and right here, Fed Powell said there are risks to the positive economic outlook. We will need more rate cuts if there is a downturn. So that's what I was telling you. The outlook on the economy by the Fed, it's not what everybody thinks it is. They do see some risks involving trade tensions and external investment on the U.S. economy, and that's why they have decided to lower the interest rates to help maintain the economic activity by making it cheaper for businesses to borrow money. All right, so that is why we're going to go and watch right now the reaction to this news on the US dollar. All right, so let's go and let's open the US dollar index. The US dollar index chart, and we're going to have a look. All right, so I'm going to thicken this chart out for you, and I'm going to show you what happened. This big bullish candle is what happened on when the news was released. We did had, it wasn't the entire bullish candle, but I think we were around these levels, and we had a big push to the upside, and then we dipped, and right now we are dipping lower. Okay, so I do expect that we're going to be testing again this key level on the US dollar index. So actually, let me just change the color on my brush, because I'm going to use a green. Yeah, a yellow, because I'm already using white for my trend lines and my key Fibonacci levels. So basically, I do expect that we are going to be testing these levels right here. Actually, I'm sorry about this. I'm gonna make it blue. Yes, actually, I think we are going to be. Well, I expect that we are going to be testing this level, and right here is where I'm going to be waiting for maybe a breakout, or more likely a breakdown than a bounce. But definitely, this is the level that I will be watching on the US dollar. The US dollar index, and let's go to the 4-hour chart. And the thing is that we are still in a very much bullish structure in this asset, in the US dollar. We're making higher highs and higher lows. But right here, we made a lower high. So if we make a lower low, then it would imply that we are going to be moving down. And the reason that I think that we are topping is this. Check this out. This is the 98.80, and if you follow this show, you know that the red lines, horizontal lines, are key historic levels, and the green ones are just immediate levels on the asset that I'm looking at. All right. So the reason that I think that the US dollar is stopping is this. Just check this out. The 98.80 level has been tested, and this is where sellers jumped in. Of course, that because this is a very important historic level, this is not the first time this has happened. And I can show you, actually, I will show you. Let's go to the daily chart, well, this is goes way back, all right? So the other key level that I want is the 97 or the 98 level. And I'm going to show you on the, I'm going to erase it afterwards, but I want to show you because this is very important, okay? So let's go to the 4-hour chart, and I mean, this is, I mean, the reason that I look at this is because this is going to give me my bias for the weeks to come, all right? So if what I'm going to show you happens, I am not going to be looking to buy the US dollar. I am going to be looking to sell the US dollar, maybe by buying gold, buying the euro versus the USD, etc. So as you can see, this is the 98.80. We have sellers jumping in right here. If you have any questions, just put them on the chat and I will be more than happy to answer them once I get to them. So first one right here, then we have a fake out and we move below, and then we have this complete rejection of the level. And now we are capped to the upside by this level right here. We are capped, okay? So we are moving between the 98.80 and the 98 level. Two historic levels being, well, we are capped between these historic levels, but because this, well, this year the Federal Reserve has lowered or has cut interest rate twice. And the last time the Federal Reserve cut rates was in 2008. So this is a big deal, all right? This is a big deal. This is why I'm expecting this level to not hold and to break this bullish structure that the US dollar is trading in. So when this happens, I am going to start looking for sell opportunities in well, in instruments around the US dollar. Okay, now let's go and let's watch what happened with gold. Very, very interesting what has happened with gold, guys, because well, I'm gonna go to a 1-hour chart first. Yeah, so this is what happened with gold. All right, now let me grab my brush. This is exactly what happened with gold. We had a flush in gold. Gold dipped to our key level again. This is our key level, all right? The 1485. If you follow this show, you know that the 1485 level is our make it or break it level in gold, and that we are definitely bullish about this level. And again, like before, this is where buyers jumped in, and this is where buyers jumped in again and again. I mean, sellers couldn't swipe all those buy orders here, and we are starting to rally again. So you've noticed that I have an alert here around the 1509 level, and the reason that I have an alert on the 1509 level is because of this. This is where sellers have jumped in. And yes, we are in a very narrow range in gold, but because of this very big rejection of the 1485 level, if we manage to break above these highs or above the 1509 level, we are definitely going to be testing again the 1523. All right, and if we break with the 1523, we are moving higher, and that is a big if. All right, that is a big if, but definitely worth taking a look at that for 1509 level when it gets hit, because this is where again we've had a big rejection again and again. So this is why it's important to know about key levels, okay? Because you don't want to be trading well, you don't want to be trading blind. Okay, I mean, what's the point of trying to make money if you don't know where big money is going to be stepping in? Okay, so what we do here, what I do, is just basically go to my chart, look for these rejections, look for historic key levels, look for key immediate levels, and trade off of them when I see the rejection. It's simple, but it's not easy. Okay, and I can show you how I do it. I actually do it every day with my premium members, and if you're not a premium member, I'm going to leave you a link below where you can try us out for 1 month for only 25 bucks, and then it's only $50 a month if you decide to stay with us. I mean, it's cheap, it's great added value, and the choice is yours. I can't make you uh, invest in your education. So we have this pattern going on. We have a flat bottom, and we have a kind of flat triangle. All right. Now, actually, I'm going to use the correct tools to draw this, which I don't have here. Yes, I do have it here. So here it's what I'm looking at. Okay. So basically, this is a the pattern that we're trading in, right? Yeah, this is a flat bottom triangle, which could, which usually is a continuation pattern, all right? Which usually is a continuation pattern, but if buyers, continue to jump in at the 1485, we're never going to be breaking it to the downside. So even though this is a continuation pattern, all right, we cannot trade it as a continuation pattern until we break with the 1485. So that's gold. Again, all my trade key levels are in the premium community. Now let's move forward. And let's take a look at what is going on with the GBP USD. All right. Now I haven't seen the GBP USD chart in a while now, so this is one of my key levels. Yellow is key immediate level. Red is key historic level. So let's go to the daily chart and let's have a look at why I do have this trend line going on here. All right, so this is a very important trend line. Let's see, boom, right here. This is a very important trend line because this is the midterm structure on the pound. This is a very bearish structure, and what's going on right now is we had some news coming out of the UK. This is a rate decision. The UK Bank of England QE total purchases is 435 billion, or this is the actual portfolio versus 435 billion and an estimate of 435 billion. No, this is purchases on the quarter. The UK Bank of England interest rate decision, this was to keep it at 0.75%. Nothing further going on, just that the Bank of England further entrench uncertainty after Brexit delay would likely lead to weaker growth and domestic inflation, bearish for the GBP. Brexit uncertainty again. I mean, you have to look at the language on the press conference, and this is the very important thing about trading the news and understanding what the news means when it comes to monetary policies and central bank decisions. The actual what's important and what's most important is not the actual news, but the statement behind the news or the press conference after the news, because you have to look at the language that is used, because the language that is used is what's going to be moving the currency. For example, here we see a lot of uncertainty going on, Brexit uncertainty, Right here, Bank of England says UK government fiscal stimulus in September spending review likely to add 0.4% to GDP over the next 3 years. So this is good. Bank of England says underlying UK growth has slowed but remains slightly positive. So everything that the Bank of England is saying after the interest rate decision is uh, looking bearish to me. Okay, so right now we are at this key level. Let me just check out on something. Okay, we are at this key level. Um, right here on today's interest rate decision, there was really no reaction on the US on the British pound. You can see that. I mean, there's absolutely no reaction on the British pound with the interest rate decision by the Bank of England. But the thing is that we are at this key level. Okay. I'm sorry about that. Okay. We are at this key level. Okay, and we are moving inside of this what seems to be a rising wedge that has broken. But I mean, the thing is that this is not a pattern that is tradable, but we are still here testing these previous lows. And the thing is that, I mean, this is very important because this is where buyers stepped in, and this is again where sellers stepped in when we broke to the downside. Let's see if historically we do have something going on around these levels. Yep, I mean, we do have this kind of I mean, this is truly important because we do have this rejection right here. Okay, so this is actually a very big historic level that we are going to be using for our trading. So I know there's a lot of lines. I'm gonna get rid of the lines that are not used to that we're not going to be using. And what I want you to look at is basically this. I mean, big rejection here. Buyers jumping in the market, moving price up. After these rejections from low to high, this is a 6.8% move. So that's big. That's a 6.8% move with very few pullbacks and not one single deep pullback. So after that 6.8% move, we did pull back for around, let me see, 3.4%. So important, very important key level to the upside that we have right now. And this is exactly where we are going to try to trade the pound to the downside. Again, this is going to be quite risky because of the political environment in the UK right now, all around Brexit. Okay, the uncertainty of a deal if a deal is going to be signed or passed by the Parliament. But again, we are going to base ourselves in this technical level to try to trade it. And if you want my key levels or my actual trade levels, I urge you to join us on the premium community. Again, there's a link below where you can join us for just 25 bucks for a month. Try us out, and then you decide if you're gonna keep running with us. So basically, yes, let's put on some Fibonacci retracement levels and some key, and let's see if we have hit any key targets to the upside. All right. So first of all, I'm going to be using the 61.8 and the 76.4. All right, 61.8 is fine. So we do have that kind of 61.8. We are trading around that 61.8. But I do think that the most important target would be a 161.8% retracement to the upside. And let's see if we have reached that or not. I don't think so. But in any case, we are going to be checking this out. And never, oh wow, this is to the pip that we have hit the 161.8. And that's what I want you to know, all right? And look at. Never, but never ever try to modify your Fibonacci levels so they hit your levels. Never do that, okay? You saw that I didn't use the 61.8 because it was around here, but this is a key a key target to the upside. So what we've done here is that we move from this high to this low, and then we retrace 161.8. Okay, we are at this key level, so this is another justification to try to look for a short opportunity, and we are going to definitely going to look for that short opportunity, and I'm going to be sending that trade idea to my premium members. But let's go to the 4-hour chart and let's see what's going on the with the pound. We have hit that key level, um, and but we are still making higher highs, higher low, higher high, barely a higher high. And if we break with this low and this low and this high, we are definitely moving lower. Again, this is the pound, or what I'm seeing with the pound right now. Very good, very good. Now let's have a look at the US dollar, Canadian dollar, and please God, tell me that I didn't again miss that. No, I didn't. So this is quite interesting on the US dollar, Canadian dollar, because this was our missed opportunity here. Yeah, I mean, if you follow my show, you already know that I missed this long, which is fine, completely and utterly fine. But yesterday I was telling you, or 2 days ago, I was telling you that this is the key level that I was looking maybe for a sell opportunity in the USD CAD. All right, but right now we are just moving very fast to the downside, and this is fueled by I don't know why. Yeah, this is fueled. I think this is fueled by oil moving up. Remember that the Canadian economy is very influenced by the price in oil because of how large the oil industry is in Canada. So again, another thing, if you didn't know, if you're looking to play with or play to trade the Canadian dollar, always have a look at crude oil, and please check out if there are crude oil inventories around the hour that you're going to be trading. So we have a question in the chat. Just let me have a look on the other screen. So if there is no rate cut further, will gold be back to 1450? I can't tell you that. Remember that, anyone that tells you, yes, I know where the price of said asset is going to be in a month is bullshitting you. No one can know, but one can predict. And if the US dollar keeps rising, it's very unlikely that, if the US dollar keeps flushing or keeps going down, it's very unlikely that gold will be breaking that 1485 and going all the way down to 1450. So that was the US dollar, Canadian dollar. Let's go to let's have a look at the euro versus the US dollar, shall we? Boom, euro versus the USD. A lot of levels going on here. This and this is just my opinion. I am not very I don't like trading the US dollar, the euro USD very much. I much rather trade if I'm looking to trade the euro, I much rather trade the euro versus the Aussie, just because the moves are much cleaner, and they're bigger, which means that which makes for a better risk to reward ratios and less choppy price action. And the thing is that the euro versus the USD, for example, if I'm looking to play or to trade the euro, I'm going to choose the euro versus the Aussie, because when you're trading currencies, when you're making a bet on a currency and you're trading currencies, you're going to be trading a currency pair. all right, an exchange between two currencies. And if you're when you're trading forex, you cannot see this market as okay. There's an opportunity of buy to buy in the euro versus the USD, and you can't look at a currency pair as a single instrument. You have to look at, and you have to know which currency are you playing, or which currency move are you playing. For example, if you're trying to play the buy on the euro, I am not going to be choosing the euro versus the USD because the USD uh, has much more influence on than the euro. So I'm going to be choosing the euro versus the Aussie because the euro has much more influence than the Aussie. So if you, I mean, the euro versus the US dollar is the most liquid currency pair, but it's the most conflicted currency pair. Okay, when we have clean moves, it's because there's big news around one of the two currencies, but when there's no news, you can see the price action is very choppy. But I mean, some of you like to trade the euro versus the USD, so I'm gonna check it out. Again, there's nothing much going on, just a rejection of the same level that was rejected a couple of days ago or yesterday, I don't remember. After this big move push to the upside, we are trapped inside of what seems to be a range from the 110.60, 110.70 to the 110. Actually, that's very interesting. And the level that this would be actually interesting is this one right here, the 110. If we manage to break below the 110, we're definitely going to be testing these lows right here. But again, let's go to the hourly chart to see if I can find something for you to trade. All right, so oh, I hate this, but let's go. If we break with these lows right here, we can certainly look for a short opportunity for a test of the 110. I'm not gonna be taking that, but if that is what you're looking to go with, a short on the euro versus the USD, that is the low that you are going to be looking for a break. Again, I wouldn't take that short because the US dollar is bearish in my eyes, and when the US dollar is bearish, well, that's bullish for the euro versus the USD, so that conflicts with my whole bias. So that's why I wouldn't take a short on the euro versus the US dollar. Okay, currency trading is far more complicated than any other form of trading there, but it's also very rewarding when you know what you're doing. So stick to your bias and don't trade blind outside your bias. All right. So my bias is bearish on the US dollar, so I'm not gonna be shorting the euro versus the USD. So let's move on to this is what the US dollar Swiss franc. Now, oh man, the US dollar versus the Swiss franc. Haven't watched this for a while. Let's see what's going on. We do have some kind of a pattern here. I mean, let's play with the lines a little bit again. But hold on. Nope. Let's play with some lines. Let's have a look at what's going on. Actually going on with this currency pair. I mean, let's move forward and let's not play with the lines. So what's going on right now is that we tested at the 99.8 level right here. We are still in a very much up move, okay? Well, as you know, as you notice, this is where we found buyers, all right, around these levels right here. Okay, so yeah, this is where we found buyers. Big drop here. What is it, about about 0.73% or 72 pips. Very important drop. on the US dollar versus the Swiss franc. I know I'm not making any sense right now, but just bear with me because there you go. So what I'm expecting here, or well, what I would do here, if I'm looking to, if my US dollar bias is bearish, yeah, I want to short the US dollar. And if the US dollar versus the Swiss franc rallies to this level, I am definitely going to be shorting here. So again, I'm going to put on an alert around this level. Boom. Add an alert. Yep, right here. So this is what I mean, right now, I'm not going to be chasing this big move to the downside ever. But if we rally here, definitely going to be shorting with a good risk to reward ratio. Again, if you just join us and you want to, get all my trade levels, just subscribe. I'm leaving you a link below so you can subscribe for just 25 bucks to our premium community. That's nothing. That's a couple. That's 2 cups of coffee. Well, not two, but a couple more. I mean, that's for 1 month of uh, this value. But the decision is up to you. All right, so let's continue and let's move forward. Let's have a look at crude oil. If you remember crude oil, yeah, there's a lot of lines here. I'm going to be just deleting. If you remember correctly, this weekend, the Saudi Aramco facilities were attacked by drones. Uh, were attacked by drones, and well, the thing is that yeah, Saudi Aramco's facilities were attacked by drones this weekend, and that halted about half of the oil production of Saudi Arabia, which and that made for the biggest jump in crude oil in recorded history to this key level right here. Okay. Now, and then we move down, and that big move to the downside is because um, Saudi Arabia's energy minister said that Aramco was almost up and running, and they were upping their output for October and November for about, I don't know, maybe 1 million barrels per day, which in my opinion is completely manipulative because there's no way they're going to be able to do that. But in any case, this market is very influenced by by output news, etc. So yeah, that made for a good drop on oil. But the thing that we want to go through and we want to know is, where shall we trade it? Where shall we trade it? Okay, so here we have a low, very key level here. So when you're looking for key levels, always look for those rejection candles, okay? Don't look for the tops, look for rejection candles. You saw that I had a line here that, and I used this line to actually trade a very small long position that I got stopped out of. And that was a mistake because I didn't use the actual key level right here, okay? So very good bounce of this key level. Again, I don't know where we're going at, we're going to be where we are going, but I'm definitely still a crude buyer. This was a good opportunity to buy crude, which I missed. That was during my sleep, during APAC session. But again, we are rejecting this key level. So if we manage to break the 59, maybe if we manage to break this 59, maybe I will be looking for a continuation when we retest it. That's about it on crude oil. If you have any questions, just post them on the chat, and I'll go through them when I see them. So yeah, if we retest that 59, I might be looking for a continuation play, but for the time being, no. I am flat on crude oil. Let's move on. Let's move forward. So British pound versus the euro versus the British pound. Very interesting right here. All right, so let's go and let's move to the 4-hour chart because this is very interesting. So we are right here, okay, and we are trading. I mean, we are in a very steep down move, but we are trading in what looks to be a wedge at a very important historic key level. All right, but sellers keep jumping in around the 88.90 level, and that has been keeping buyers able to actually trade this formation, which is a buy at a very structured resistance at the breakout of this this pattern. That would mean that would be a very nice risk versus reward trade for maybe a continuation higher. But again, this is very depending on the pound, guys, and you have to look for that. You have to look for what's moving each currency pair, and this is very depending on the pound move. But there's a good rejection of that key level going on right here. So be aware of future long opportunities in the euro versus the British pound um, above these highs, of course. Let's move on. I think that that will be about it for me today on the Daily Edge. Um, if you just join us, you can actually watch the recording of this show by clicking on the same link. Um, this was very fun, guys. I do this every single day. You can, if you are not, I mean, if you're here via our social media, I'm leaving you a link below so you can join my newsletter so I can actually email you whenever I go live. Okay? Um, that was very fun, and I'll see you guys tomorrow. Goodbye.